I think everybody knows stock market is near an all-time high. Had a drop in the fall, but it seems to be coming back. You know, the best way to make money is to buy low and sell high. The market's high. You know that, right? The market's high. So what should you do? You know, especially if you're thinking about retiring in the next 2 to 5 years. What should you do? Well, listen up, and we're going to talk safe strategies. I'll explain that acronym to you when we come back.
Welcome to the Ask Brad Show. Be prepared to hear ideas, concepts, and strategies that may challenge the way you were taught to think about saving and investing for retirement. It's time to roll up our sleeves and get to it. And now, the host of the Ask Brad Show, here's Brad Williams.
Well, I appreciate, as always, you joining us this morning. Today, I hope I come up with some good information for you, especially if you're invested in the markets. You know, you may be very happy today, but what about the future? You know, we're in the longest run in stock market history as far as length of time of it going up. Now, that doesn't mean it's going to go down right away. But today we're going to talk about safe investment and safe retirement strategies. Now, what do I mean by that? Am I talking about sticking your money in your mattress or putting it in a safe deposit box or some crazy stuff like that? No, SAFE stands for sound advice for everyone. Doesn't matter whether you're a novice investor or one with decades of experience. Doesn't matter if you're wealthy or of modest means. And it doesn't matter whether you're in the growth stage of investing or in the income distribution phase of retirement. This is sound advice for everyone. And, we'll just call that safe strategies because they cover all the phases of your investment life. Now, why safe? Well, common sense, sound advice for everyone, but they're defensive in nature. And they're inclusive of all types of investment strategies. One of the keys of a safe strategy is having a full financial plan. You know, it's important to know that many financial advisors today are really financial salesmen and financial saleswomen. What you need is a financial Sherpa. And I'm not talking about a financial salesman. I'm talking about a financial Sherpa. Now, what is a Sherpa? Well, a lot of you know that's one of those guides in the Himalayas that takes you up to Mount Everest or some of those other peaks. And they guide you up and they guide you down. And that's good analogy for your financial life because as I've covered in other shows, the retirement mountain, you have the ascending phase, which is the accumulation phase, and the descending phase, which is a distribution phase. The key is not just building it up, but making sure you have enough money to get all the way down. Making sure you got a paycheck for your life and that you're not running out of money before you run out of life. And, there's a lot of strategies you can use to do that. You can go for growth till about 5 years or so before retirement. And that makes sense. And then switch into a plan where you're needing to draw income. But when you're thinking about retirement, when you're within, that 5 years or so of retirement, can you afford to lose 25 or 35% or more as we did in 2008 and 2000 if we have a major market decline? And again, remember, I said we're in the peak of the market. And what do they always say? Buy low, sell high. Now, again, I'm not saying you should go out and sell everything. Your situation is based on your situation. And that's something that requires discussion and investigating. But when you think about it, different types of advisors, there are some really good advisors that are great in that growth phase. They pick the right funds, they're there for that long period of accumulation where when the market goes down, it actually works for you because of dollar cost averaging. But they may not be that advisor to get you through the retirement phase of your life. So when we come back, we're going to talk a little bit more about that.
Thanks for listening to today's program. As a bonus, we're offering a free copy of Turning Financial Planning Right Side Up by Jeff Small. Turning Financial Planning Right Side Up reveals exactly how Wall Street, financial planners, and the news steer investors into poor and expensive decisions. Here's what actual readers have said. When it comes to making sure you can retire and stay retired, I would categorize Small's book as real news. Jeff has nailed it. A must-read for anyone in or approaching retirement. I highly recommend this book. Turning Financial Planning Right Side Up by Jeff Small. Available free right now. Be one of our first 3 listeners right now to call 844-343-6048. That's 844-343-6048. A great book at a great price. Absolutely free to our first 3 callers. 844-343-6048.
Coming back, we talked about 2 investment periods, the accumulation period, the distribution period. And most people use a financial advisor of one sort or another. Some do it all themselves. Some do it really well by themselves. But when you get from point A to point B, which is that accumulation, oftentimes that advisor may not be the right one to take you from point B to point C, which is the retirement phase, and takes you near death, leaving a legacy, those type of things. So again, it starts with safe investing, and that's what I mean by safe investing is sound advice for everyone, and it starts with having a written plan. Because you know what? If you don't have a plan, you're just winging it. And you may think you're conservative, moderate, aggressive, but if you don't have a plan, you're really just gambling. It's like going to Tunica and letting the money ride and feeling good as long as it's growing. But as you start losing, you get more risky and risky because you got to get it back. That's not what I'm talking about. I've heard many times over my 31 plus years that people say investing in the markets, whether it's stock mutual funds, or bonds, bond funds, ETFs, is gambling. But what I'd say is those comments are probably made by people who haven't taken the time to come up with a comprehensive strategy, or didn't take the time to find someone who can help them come up with a comprehensive strategy. So when we talk about safe, sound advice for everyone, what I'm talking about is taking appropriate risk versus gambling. Gambling's a game of chance. You roll the dice, you hope it comes up to you. There's a reason the casinos are nice and have cheap food. It's because the odds are in their favor. And a lot of people would say, well, the odds are in Wall Street favors too. Well, in a way they are. If you continue to invest at, say, 60, as you did in 40, then you are playing with the house odds. That's why having a different strategy when you're in that transition into retirement and in retirement is so important. So when you talk about investing, like I said, gambling's a game of chance. You either win or lose. You bet on a football game, a horse race, but you don't really have an influence in that. You're just betting. There's no chance for you to succeed other than plain and simple luck. But investing is you're choosing to participate in the growth or income of a company and a group of companies, if we're talking about mutual funds. You can look at daily prices, daily valuations. You can choose when to put money in there. And equally, more important, is when to sell and get out. So it's not really like gambling, because once you're gambling and you're in, you're stuck. So, it's a whole different thing. So having a strategy on the exit is very important, because you could be doing really good, but like so many people, you don't have an exit strategy. Yeah, you thought, well, when the price gets to this per share, I'll buy it and I'll hold on to it, but haven't really given a thought to exit strategies. So, you can ask your advisor, and I would recommend you do if you have one and you've got some stocks you've held for a long time. What would make them tell you to sell your Apple or your Vanguard fund? And what I would position to you if they start talking about trade war with China and tariffs and the election, maybe they don't know. Maybe they don't know how to protect your capital. That's a huge problem. You got to have a reason why the money's in there. And you got to know also when you need to take the money out. And when we come back, we're going to talk about that.
At Brad Williams Financial Services, we believe in innovative thinking, and we're not afraid to challenge conventional methods in our approach to managing, investing, and preserving wealth. To learn more about Brad Williams Financial Services or to set up a complimentary review,
call 844-343-6048. That's 844-343-6048. Today on the Ask Brad show, Brad wants to make sure he gets something of value into our listeners' hands. And so he's put together a report called The Guide to Aging. We're all living longer, and that makes retirement even more challenging. But in this very informative guide, Brad's put together point after point after point of things we're all going to have to deal with, like claiming our Social Security, getting ready for RMDs, and estate planning, and so much more. For your complimentary report, The Guide to Aging, give Brad a call right now, 844-343-6048. That's 844-343-6048. We're all going to be living longer, and that's a good thing. But that's also going to present some challenges. Educate yourself today. 844-343-6048. That's 844-343-6048.
As we come back, you got to know when to exit. And there's got to be a sound reason for that. And that's why you've got to have a purpose-driven plan. And I've done a show on that if you want to go back to the old shows and look at them. And I'd recommend you do that. If you listen to the show and you find it beneficial and you find it informative, go to the AskBradShow.com website. And that's AskBradShow.com. And you can listen to some of the old shows. Again, today we're talking about safe strategies, sound advice for everyone. As we were talking about is buy and sell discipline. You got to know why you're in, and you got to know when it's time to get out. One person might be 45 and investing for maximum growth. Great. Somebody might be 66 and get ready to retire. So they need to draw down to maybe delay Social Security. Knowing why you're investing and what the purpose of that is very important, because it shifts you from a performance-based mentality to a purpose-based mentality. And that's the key. That's one of the outcomes of having a written plan, is you're knowing when the forks in those roads are and that you're going to need to make a different strategy. You're going to hear me say in this show and in many shows about purpose-based investing. And that's a sound part of the sound advice for everyone plan. You may have a strategy that says, well, I want to beat the S&P 500 year in, year out. And you're going to need to get about 10% over time. That's another show entirely about stock market history. But you're also going to have to realize that you may have a 35 or 40% or more drawdown about once in a decade, because that's what the stock market does. And so, we have bear markets, we have bull markets, we have secular bear markets, which are your long-term bear markets, secular bull markets, which are long-term and cyclical. You can often, even in a down market, you can have up and down markets. So here we are in one of the longest bull markets of stock market history. And the question that everybody needs to be asking, are we closer to the beginning of it or to the end of it? So is there a day of reckoning coming, or is trouble already brewing? That is why making the change to purpose-based investing makes so much sense and is part of a safe plan. Sound advice for everyone. So whatever stage you're in, midlife, still growing for maximum growth, near retirement, but wanting to protect what you have, maybe get a little more, it's good to have a safe plan. It's good to have a purpose-based plan. So what is that strategy? It's a strategy that's based on your needs, based on your goals, and not some buy and hold and see what happens and hope for good luck strategy. You know, how many times have you known people that bought a share at $10, it went to 20, 25, 30. They're just ecstatic. And then it starts coming down and they're locked into it. They've got this emotional attachment to it. And they watch it come through the $10 a share. And then they're wondering, now I got to hang on to it. Because they didn't have an exit. They didn't know what the purpose of that was. They had not written it out. You ask people, if you're close to retirement, then you went through 2000 and 2008 and how that made you feel. I know you probably knew people that extended their retirement because of those two dates, or one or both of them. So it's very important, again, to be thinking about safe strategies, sound advice for everyone, and having a purpose-based financial plan. What I'd like to do is got a free report, which is along the lines of what we're talking about today, the guide to aging, making the right decisions at these milestone ages. It's a free report that we'll get out to you, email it to you, mail it to you, whatever you like. Just give us a call at 844-343-6048. That's 844-343-6048, and ask for the guide to aging, and we'll get it out to you. No cost, no obligation. You know, we're not going to try to sell you something. We just want to get this information out. I think that's one of the biggest things I like to do with my show is get information out there. I mean, it's great if you call and you want to come see me, but what I try to do in this show is give back to this great community that's given to me a successful business. You know, it's all about reciprocity. I think it's all about what you give in terms of what comes back to you. Call in 844-343-6048. Get the guide to aging. It'll help you through some of these milestones. So let's get back into safe strategies and purpose-driven strategies. And again, as I mentioned very early, got to have a written plan, got to have it in writing, and you got to have goals. Now, you may have written one out, and that's great. You're ahead of most people, but you got to stick with it. And I've done shows on financial GPS. A financial plan should be like a GPS because things happen. You know, you may have to take a detour and it redirects you and takes you back on course. It's like being in an aircraft. You know, you get on that airline, you're off course most of the time. It's just that GPS brings the nose of that aircraft back on heading and keeps you on a path to where you want to go. So when I say safe and when I talk about defensive, what I'm talking about is, like I said, not putting money in your mattress or in a safe deposit box. It's not looking at annuities. Annuities have a place. A lot of times when you hear safe money, you can be assured that what's getting ready to happen next is an annuity pitch. And I'll be frank with you, annuities get a bad rep from Wall Street because they don't like them. And annuities don't fit everyone. So I'm not sitting here pitching annuities. But oftentimes when you say safe, that's what people think of because that's usually what is in the next breath when you talk about that. That's not what I'm talking about. I'm talking about sound advice for everyone. Again, having a written plan and sticking to it, having goals, having milestones, having regular reviews on that plan. That plan, when you start working with a financial advisor, I personally use a special planning software that goes through a process with my clients, and we develop a plan and then stick to it. And that becomes the basis of our reviews, is how we doing according to the plan. To me, that's a great tool to be a Sherpa, to not be just a financial salesperson. You know, when you go into a financial review with an advisor, the purpose shouldn't be that, oh, you got some cash sitting around, we need to do something with it. It should be, are we on course? And what do we need to do to adjust that plus or minus to make sure we stay on course? So as we get back into one of the key things that started this conversation was we're in a long running bull market that's pretty long on the tooth. Now, I know a lot of you out there were smart enough to get out before the last two and didn't lose 50, 60%, but many of you didn't. And so it's having an exit strategy, knowing why your money's in there, that's very, very critical. So how do you do that? Well, it's a matter of balancing your investments, because so often when you go in and you tell your broker, I'm a little cautious and I want to get more conservative. Well, because they're probably only dealing with mutual funds and stocks, they're just going to move you in more conservative mutual funds and stocks. But you're still in the market, and there are other tools out there. There are many tools that you can use to diversify your portfolio, to start de-risking it as you're in that retirement phase. So just remember that.
Have you missed any of today's show? Would you like to listen to past shows? We've got you covered 24/7. Visit AskBradShow.com. That's AskBradShow.com. Thanks for listening to our show today. In retirement, you only get one chance to get it right, and we know that proper information leads to informed decisions. And that's why we hold free informational workshops in our area every month. Topics like Social Security, RMDs, the latest retirement tax strategies, IRAs, estate planning, and so much more. For dates and times of the next free workshop in your area, just pick up the phone. Give us a call today. Call 844-343-6048. That's 844-343-6048.
All right. Now, we've been covering safe retirement plans, and that stands for sound advice for everyone. And what does that really mean? It means purpose-driven investments. It's not performance-driven. Yes, performance is critical. It is very important, but that should not be everything. It should be about making sure that the money's set up to do the things you need to do with it. So if you're always aiming for the fence, you're always wanting that home run, there's a common characteristic that home run hitters share, and that's they're strikeout kings. Good ball teams win games by base hits, and they just keep moving that ball and keep moving those players around the base, and they got constant pressure, constant push, constant points on the board, and that is a good solid strategy. Trying to pick the next Apple or the next Microsoft, that's not the way to invest for retirement. So when we're talking about safe, we're talking about sound advice for everyone, purpose-driven investments. When we look at what happens when you retire, you need a drawdown strategy. So often the time is spent on the accumulation part of it, but you've also got to have a drawdown strategy. There's been some changes in that. Used to be that everybody said, well, you could save $1 million, draw out 5%, and you have a reasonable chance, which was about 90% chance of not outliving your money. Then they drew that down to 4%. With the low interest rates and the fact that the bond market's got some issues coming up, when interest rates start rising, bond values are going to drop because the prices of bonds are inverse to interest rates. You have to rethink that 4%. In fact, Morningstar, one of the key proponents of that, is now come out and said 2.8%. So think about that. You got $1 million and they're telling you that at 2.8% withdrawal rate, you have a reasonable chance, roughly a little over 90% chance of not running out of money before you live. And a lot of that's based on the sequence of returns. If you have your gains in the early years, then that can work out real good. If you have your losses in the early years of doing that calculation, it could be a disaster. So remember, safe strategies. It's all about having structure, having a written plan, and having purpose-driven investments. Now, one thing I want to lay out to you is one of the things I hear when a lot of people come in to see me for my show or from one of my workshops, when they sit down with their advisor, they're really not covering drawdown strategy. They're not covering Social Security. They're not covering putting everything together in a written plan. It's all about returns. And as long as the portfolio has got a great return that year, then everybody's happy and they go home and they think they got a lot accomplished. But what it's really all about is looking at the roadmap. And if you're going from point A to point B, and that journey's 500 miles, you want to make sure you check in periodically to make sure you're on track. That's what an annual or quarterly or semi-annual reviews, because frankly, I do many different kinds. Do big ones on an annual basis and then do check-ins on a quarterly basis typically, just to make sure you're on track, just to make sure something hadn't changed in your family, in your life, with your health. A lot of things drive your investments. So folks, I cannot impress you enough. Make sure that you've got a safe strategy, that you've got a purpose-driven plan. Now, if you're not sure you do and you'd like to talk to me, we can spend 10 minutes on the phone. You can schedule free 1-hour consultation, no cost, no obligation. Just give me a call, 844-343-6048. That's 844-343-6048 and ask for the free consultation, and we'll be happy to give it to you. No cost, no obligation. Get to know each other, find out what you're looking for, share some philosophies, figure out if we might be a good fit. If that's something that interests you, give us a call, 844-343-6048.
At Brad Williams Financial Services, our goal is to develop enduring, long-term personal relationships with our clients, knowing that you have placed your trust in our expertise and dedication. To learn more about Brad Williams Financial Services or to set up a complimentary review,
call 844-343-6048. That's 844-343-6048. Thanks for listening to today's program. As a bonus, we're offering a free copy of Turning Financial Planning Right Side Up by Jeff Small. Turning Financial Planning Right Side Up reveals exactly how Wall Street, financial planners, and the news steer investors into poor and expensive decisions. Here's what actual readers have said. When it comes to making sure you can retire and stay retired, I would categorize Small's book as real news. Jeff has nailed it. A must-read for anyone in or approaching retirement. I highly recommend this book, Turning Financial Planning Right Side Up by Jeff Small. Available free right now. Be one of our first 3 listeners right now to call 844-343-6048. That's 844-343-6048. A great book at a great price. Absolutely free to our first 3 callers. 844-343-6048.
This is Brad Williams, and I have been privileged to have been an instructor over the last 12 years or so at the Osher Lifelong Learning Institute at the University of Alabama in Huntsville. They have some great course offerings. I'm currently teaching a course that I've written and taught for many years, Changing Face of Retirement in the 21st Century. But that's not all of the courses there. You can learn languages. You can learn hobbies, travel. There are so many things that you can get out of these courses they offer at the Osher Lifelong Learning Institute. So check it out today and come keep your brain working.
For more information on the Osher Lifelong Learning Institute, call 256-824-6183. That's 256-824-6183. Or email olli.com info@uah.edu. The Osher Lifelong Learning Institute. Come keep your brain working.
Did you know that Americans leave on average as much as $10 billion in Social Security benefits because they're unclaimed? The reason is there's a lot more to Social Security than you realize. Claiming benefits is being so complicated, even the smartest investors make mistakes that cost a small fortune. So even the average retiree can get shorted by tens of thousands of dollars. It's true. I've seen it. Well, thanks for tuning in. Today we're going to help you become one of the millions of Americans that don't get the Social Security benefits they're entitled to. Most people have this preconceived idea about Social Security. What they don't know is there's a lot more at stake than their benefits. It's not just them. It's spousal benefits, Medicare premiums you pay, and a lot more than that. If you make one wrong move here, it's expensive. So today's show, we're going to reveal 8 surprising things you don't know about Social Security, including some strategies that are little known that can boost your benefits for not only you, but your spouse, and can help you prevent your Medicare premiums from going through the roof. Plus strategies, get this, to help you avoid taxes on as much as 85% of your Social Security benefits. Most people don't realize their benefits are worth a lot more than they think. Did you know even an average earner, Social Security benefits could equal up to about $750,000 in total lifetime benefits? So when you think about that with you and your spouse, that could be as much as $1.5 million. That's a lot of money. So I would think you'd want to get it right. Now, when you look at Social Security, the most impact is at the lower income levels, and then the middle get more, and then the upper get less. So when you look at this, when I chart this out for folks and they see that, you have that initial impact of dollars contributed to Social Security, and then that second tier. It's a 3-tier system. So if you're in the upper tier, you want to make sure that since you contributed so much that you're getting the maximum benefit. When I look at working with a client, we really start at Social Security planning because that's one of those really critical pillars of building a good plan. So the foundation is Social Security, and then we build from there. And so timing is more than you think. When we look at how and when you claim your benefit, it does impact the size of your benefit check. What people don't realize that this could trigger taxes, double your Medicare premiums, could wipe out spousal benefits. There's a lot of trap doors that you need to know about when you're going into retirement. So it's critical to do it right. And at Brad Williams Financial, we've been doing financial planning for people just like you for over 31 years. But what I've seen over time is a lot of people make mistakes because they don't go to someone who understands Social Security and has the tools to show you the numbers so that you don't make the mistakes that so many make. There's one client that I can think of. She's getting $1,510 per month per life. But if she had waited, she could have had $2,885 a month. So putting that off to 70 can make a lot of difference. There could be some strategies you want to use. Maybe if you're quitting work at 65 and you can take money out of your IRA, it may make sense to defer that Social Security to get that 8% retirement income credit. So as it works, when you're 62, you can take it out early, but you're deeply discounted on that. And then that discount starts dropping off up to your full retirement age, which most people today is 66 and change. And then once you hit full retirement age, you get that 8% deferred retirement credit. And that's for life, folks. Now, the 8% doesn't count toward your spouse, but waiting to full retirement age does. So When you think about that, that's a lifetime decision, and it has a lot of implications. So make sure you make the right move. So if you're right now thinking about claiming Social Security benefits, you might want to stop and make sure you're not on the verge of making a mistake that could cost you a lot of money. When you look at the impact it has on taxes, Medicare, spousal benefits, what I do is I do a personalized, customized Social Security analysis. Now, a lot of firms charge money for that. I don't charge a dime. What I do in that 5-point analysis is look at the precise timing of when to take your benefits, when you're going to get the most, a trick for boosting spousal benefits, how you can avoid sending your Medicare premiums through the roof, and strategies to minimize and maybe even possibly eliminate taxes on your benefits. And to find out if you're eligible for additional benefits that could mean thousands to you. So if you want to be one of the first 5 callers right now at 844-343-6048, that's 844-343-6048, and you'll qualify for that free benefits analysis, and we can get that out to you. Just call in, and we'll tell you how you can get that. So, when I opened the show, I mentioned something about $10 billion, and that came from a Forbes magazine article, that those are the benefits that go unclaimed every year. And so we're talking today about surprising benefits you may not know about Social Security, and when we look at also how it's taxed, how you can avoid paying taxes on up to 85% of your benefits. So when we look at how that's calculated, that's one of Social Security's big gotchas. There's really 3 of Social Security's big gotchas. One of them is paying tax on 85% of your benefit, and most people don't realize. Now, what I'm talking about, folks, I'm not saying an 85% tax. I'm saying having 85% of your benefits counted towards taxation. So if you haven't taken Social Security, you still can do some things about it. And, if you're already taking it in your past year, there's not much you can do. But looking at Social Security as a foundation is really important because it can affect taxes on all your other income too. So this is something you want to avoid. Now, since we're talking about taxes, let's talk about how you can lower your Social Security taxes. And U.S. News and World Report put out a report that said, stay below the thresholds. And, of course, the thresholds are changing with Trump's tax law. Your CPA can help you with that. I've got a handy tax cheat sheet that I hand out that will help with that equation. Manage your other retirement income sources. And this is critical. I have spoken to so many other advisors in my industry that really don't have a way to calculate maximum benefits with Social Security. There's some software now that does a really good job that I use is like I mentioned earlier, a primary tool when we get started. So that's when the questions of when to draw. Do you wait till you're 70? Do you get it now? It's knowing the numbers. To me, it's all about the numbers. So when we look at when to start taking it, we can take into account, as I mentioned earlier, taking IRA withdrawals to get you to 70 and what impact that's going to have on taxes. What happens when you start having to take your required minimum distributions? So what you don't want to do is get to that point where you're right at retirement and say, I need to figure out what I'm going to do with my Social Security. And then you're in that pinch where you got to make a hurried decision and you may make a mistake. Now, one other strategy could be systematic Roth conversions as you're getting close to retirement. But before you do that, it's really good to sit down with a professional, someone who understands this, and let them help you calculate that in lieu of the tax changes we've got. That's real key. Another gotcha is the Social Security taxes when you're receiving it. So you might want to have taxes withheld, calculating those things so you don't get burned when comes tax time. Another thing is, Social Security can withhold benefits depending on when you claim. Claiming your benefits before full retirement, like I mentioned earlier, costs you money. And it not only costs you money, it costs your spouse money, because their benefit's going to be based on when you took yours and the benefit that you're receiving. So remember that, because that's going to be critical. There was a Motley Fool article that said that if you won't reach your full retirement age in 2018, the Social Security Administration is allowed to withhold $1 in benefit for every $2 in earned income above $17,040 in income. Now, the exception to that is the year you retire, or in the year you start taking your benefits. That goes up to one of $3 for every $45,360 of income. So this is really important. A lot of people want to take their Social Security early, and they don't realize that if they're going to continue working in any way, they better make sure they watch their income, because it could cause their Social Security benefits to be changed based on their income. So again, what we're talking about here with Social Security is being in control, making sure you make the right decisions based on solid information. So just keep that in mind. As I mentioned earlier about our 5-point Social Security analysis, a lot of firms, like I said, charge for that. But in this report, it's going to tell you the optimum time, the earliest time, and it'll show you those break-even points to figure out what happens when you wait. When is that point that you break even, that it makes sense, and now you're living on that extra money the rest of your life. So, as I mentioned earlier, we're going to give this report out to the first 5 callers. 844-343-6048. That's 844-343-6048. Just ask for the free Social Security Claiming Strategy Report, and we'll talk to you how to get that. Our next segment, I'm going to talk about what if you've already claimed Social Security benefits. Can you make any changes? Yeah, there's a little known loophole that can give you, for you golfers out there, a mulligan. So stay tuned.
At Brad Williams Financial Services, we believe in innovative thinking, and we're not afraid to challenge conventional methods in our approach to managing, investing, and preserving wealth. To learn more about Brad Williams Financial Services, or to set up a complimentary review,
call 844-343-6048. That's 844-343-6048.
Hello, this is Brad Williams with Brad Williams Financial Services. Deciding when and how you retire is one of the most important financial decisions you'll ever make. Should you take a lump sum? Do you have to pay tax on this money? How do you invest the distribution proceeds to make sure you don't outlive your income? With such an overwhelming number of investment options, one of the most important decisions you can make is to seek the advice of an advisor. For this important partnership, you need a highly trained and experienced professional who sees your total financial picture. Someone who can help you define your life goals, establish the right financial plan, provide strategies focused on your needs, and help you stay on track. So if you or someone you know just retired or is thinking of retiring, give me a call today. I'll provide a tailor-made analysis of your retirement options at absolutely no obligation to you. Can you really afford to retire without knowing all the facts?
Call 844-343-6048 or visit us online at AskBradShow.com.
Welcome back. You probably know that how and when you claim Social Security can have a significant impact on the size of your check, especially if you've been listening so far. But it could trigger an avalanche of taxes, send your Medicare premiums through the roof, and wipe out your spousal benefits. I mean, that's a lot of money. It could be tens of thousands of dollars or more. I want to welcome you back. This is Brad Williams again, and we're talking about 8 surprising things you don't know about Social Security that could cost you a small fortune. Now, in this segment, we're going to talk about how relying on a one-size-fits-all strategy doesn't make sense, and one loophole that could reverse a mistake if you've already claimed your benefits. Now, here's the fifth one of the 8. Once you claim your benefits, remember this, there's no turning back. There is limited exception, though. Claiming Social Security benefits is what I was mentioning to you, the foundational principle of building retirement income. Because the biggest concern of people is not outliving their money. So you want to get maximum income to have the most comfortable lifestyle you can when you retire. So that's why you got to be careful when you claim Social Security, because you're stuck with that decision no matter how bad and how rough it is. So make sure you get it right from the start. Now, one exception to that, you're allowed a mulligan. There's a do-over. If you regret claiming benefits, that's the key. You got to do it early. So within 12 months of receiving the first benefit, if you'll file SSA 521 or request for withdrawal of application, that's the key to doing it. Now, there is a catch. You only have 1 year to taking your claiming decision back. Now, I'm going to tell you a story about Donna. Now, it was longer than a year, and she couldn't undo it because she met me after that. And one last catch is you have to repay every cent of benefits you received, even if you're going to a higher amount. Even if you say, well, geez, I was eligible for more. Why don't you just give me the extra $200 or $500 for 10 months and that'd be it? No, you got to pay everything back within that period, and then they'll send you a better benefit check. So doing the do-over, if you've calculated it wrong, could be a good windfall, could mean a lot for your spouse, but you don't know that until we run the numbers. So, you may end up back in the workforce, and something may happen to the family, allows you, where you have to go back in the workforce within that time, and it allows you to erase those benefits and start them growing again. So that's key. So again, as I mentioned before, if you're just looking, I'm full retirement age, it's time to claim benefits, that could get you in trouble. Where we used to be in this is because we didn't have software that does what it does today. I think a lot of advisors in the past just kind of looked at it as a longevity question. If you and your family have long lives, then might be better to wait. If you don't, go ahead and take it early. That's the key. Just making sure you make the right choice up front. Really, the bottom line is there are hundreds of different strategies for claiming Social Security, and really only one of them works best for you. And remember, it ripples through time, because the decision you make when you claim Social Security is going to affect you and your spouse for the rest of your lives. Because, as I mentioned earlier, if you're the high income earner and your spouse is going to be relying on your benefit to get that additional amount when you're no longer there, when you take your benefit has everything to do with the amount of benefit they have. So just keep that in mind. So when you go from 62 to full retirement age, you get an increase every year in that because you've been discounted down to age 62. So when you get to full retirement age, you might look at that as a baseline. After that, then you have that 8% deferred retirement credit. Now, your spouse doesn't get credit for that, but they get everything up to full retirement age. So you need to make sure that you make the right decision when you claim it, because it does affect your spouse. Now, another thing is people say, well, I'm divorced. How does that impact me? Well, you can claim benefits from your previous spouse. If you were married at least 10 years and you're not remarried, you can claim under your spouse. So now they have no say in it, and it doesn't affect their benefit. It's just divorced people have a different strategy. There's a different strategy there. So as I mentioned before, what I look at is the optimal strategy, the earliest strategy, and everything in between. So that's where, before you make that Social Security decision, making sure that you've got the numbers. And that's where that free Social Security analysis that I provide comes in handy. I mean, a lot of people charge hundreds of dollars for it. It does things like give you tricks to boost spousal benefits, because a lot of people don't realize their Medicare premiums are affected by their taxation and their income levels. So just make sure you're making the right decision so you're not costing yourself a bunch of money. So again, that free Social Security analysis available to the first 5 callers, 844-343-6048, and we'll be back in a minute.
Have you missed any of today's show? Would you like to listen to past shows? We've got you covered 24/7. Visit AskBradShow.com. That's AskBradShow.com.
Welcome back. This is Brad Williams, and today we're talking about the 8 surprising things you don't know about Social Security that could cost you a small fortune. Next up, I want to talk about mistakes claiming Social Security benefits that could cost you a lot. If you're over 50, you need to know these. You know, you may not be right at retirement, but if you're over 50, you need to know these. So you need to start thinking about it. Spousal benefits, we're going to get back to that. It affects you and your spouse when you claim. And I can't stress that enough, because some of the biggest mistakes I've seen is people have come in and begun working with me, and we look at some of the decisions they made in the past. They didn't realize when they claimed at 62 what impact it was going to have on their spouse. We also talked about divorce benefits. You can claim Social Security based on a previous spouse. As long as you were married 10 years, you're not remarried. You got to be 62 to file. But you know, spouses and ex-spouses, that's a critical planning tool for those that it affect. Again, as we've gone through this, remember, there's a lot of pitfalls in claiming Social Security. And it's important to work with someone who is going to give you that data so you can make the right decision for you. And a lot of that comes from, do you need the income early? Can you wait? Are there other sources of income you can get to help you delay Social Security so you can get that full retirement benefit at age 70 and take advantage of those 8% deferred retirement credits? The number 8 thing that I think is very important is that when you call Social Security, they really cannot give you advice on when to claim benefits, okay? So you've got to understand that all they can do is answer your questions. They're not there to provide you advice. Don't expect it. And that's really not their job. They're there to tell you what your benefits are. When you get to full retirement age, they may say, well, there's no longer a cap on your earnings. And you may say, okay, well, let me go ahead and take it. But if you don't know about the 8% deferred retirement credit, then you leave it on the table. So, again, what I think is important is the fact that you've got the data, it's part of your plan, and that you've examined what the numbers mean, how they affect you, how they affect your spouse, how they affect your taxation, how they affect taxation on your IRAs and RMDs, what strategies can you use to maximize Social Security and minimize taxes. All these there's tools available to show you these numbers to help you make the right decision. So I hope you got some good information out of our Social Security strategies. And again, for the first 5 callers, we're going to give you a free, personalized, customized Social Security timing report. Just call 844-343-6048. That's 844-343-6048.
That's all the time we have for today. To learn more about Brad Williams Financial Services or to set up a complimentary review,
call 844-343-6048. That's 844-343-6048.
Investment advisory services offered through Sound Income Strategies, LLC, an SEC-registered investment advisory firm. Brad Williams Financial Services and Sound Income Strategies, LLC are not associated entities.